Welcome to the Reimagine podcast. Each week, give yourself 30 minutes and meet the people working hard to create the future of insurance today.
Hi, this is Paul Tyler, and we're bringing you a very special episode. And it's a special episode where we're taking the Annuity Show and the Reimagine podcast and we're slamming them together for something really interesting. And I've got two of my favorite co-hosts for both shows. Laura, welcome.
Yeah, Paul, thanks for having me. I'm excited to be here today. For those who have not met me as of yet, I am Laura Dinan-Haber, the Innovation Program Manager for Nassau Reimagine. We're an InsurTech incubator located in Hartford, Connecticut.
Ramsey.
All right, I'm Ramsey Smith. I am founder and CEO of the startup Alex.fyi, and I am ongoing co-host of That Annuity Show. And we're just super excited about this opportunity to take these two franchises and have us work together to come up with really an additional content over the course of the next 5 or 6 weeks. I think will be very additive to our audiences.
Yeah, great. And you take retirement broadly and you take innovation and put them together. I think we've got some really interesting topics here to talk about and explore. And think about what's going on broadly in the industry, insurance industry, low interest rates, high market volatility, big cost pressure. Oh, by the way, massive change in consumer behavior. We have 83-year-olds who've been, talking to us on online chat at 11 o'clock at night on our patio over the last 6 months. Lots and lots of change. And we thought, why not actually have a sort of 5-part series exploring where this industry may head? And Laura, do you want to talk about what this event looks like and what our goals are?
Yeah, absolutely. So by bringing together both That Annuity Show and then Reimagine and the collision between the two, it's a really great opportunity for us to bring together an audience. And in many ways, we're working to create a new network of individuals who are in this space and who may not have created it yet, but are thinking about doing so. So how do we have the conversation between investors, between carriers, startups, people thinking about how they want to change themselves as a consumer and the behavior within that? So really it's a interactive dialogue that I think you're going to find very interesting to hear hard questions being asked and also some challenging questions where we're exploring themes and topics that are relevant to the retirement age, if you will, but in ways that people may not have thought of it before. So it's a great collaboration amongst people who may not even know each other before they take place on the events. But I think it's an exclusive club, if you will, that we're looking to create here.
Yeah. So on November 18th, we had our first forum. It was forum number 1, funding innovation in retirement planning. We had some great venture capitalists on, as well as people in the industry who are leading innovation investment in the sector. Question of the day was, where should the money go? Ramsey, what were the big takeaways on your part?
Sure. So there were a few things. One, just loved the turnout. It was just the right amount of people to bring lots of different ideas. And also, there were a lot of familiar faces and new faces, people that I had met one-on-one before, people that I wanted to meet. And so, I realized very quickly that this is really going to be a great opportunity for anybody that is lucky enough to be invited into our little club. In terms of some of the interesting things that were talked about, we talked about how InsurTech historically has been largely the domain of P&C, and for a long time there's discussion about when will it enter into the life insurance space, and it is happening. There's been a lot of growth in investment in the life insurance space, but my big takeaway was that as we listened to some of the investors talk, that they still have money on the sidelines. There's still a lot of problems, everything from distribution to policy management to underwriting, or I should say, opportunities and challenges that they have yet to invest in. And then the last piece of it that I think is really important that we touched on a bit towards the end was the need not just to actually fix all those various different parts of the value chain, but to actually make sure that they're all integrated smoothly in order to get the best customer experience.
Yeah. Very well put. And with that, Laura, you want to roll the show?
That sounds great. Thanks so much. We hope you enjoy. Welcome to the first forum in the Reimagining Retirement series. Again, this is first of 5. So thank you for coming on this grand experiment with us. And it wasn't just haphazardly, it was with intent. So as Paul had mentioned, we're looking to create a new network of, the chosen 100, if you will. So now consider yourself a founding member. Welcome to the club. And I'm excited about the conversation today. And, we find ourselves in a space of, lower sales, lower interest rates, having to adapt to a digital platform in many ways that some of us were ready for, some of us may not have been ready for, but I think it's a reality that will be current and will be future for a long time to come. So today's conversation is one that we're looking towards dollars, and dollars are important because it's the lifeblood of business in a lot of cases. It's going to keep lights on or it's going to turn them off. So looking at where are investors putting their money, where do carriers think money should be going, and how does InsurTech react to that? Is that a happy collision, or is there work to do in this space? And we hope that this is just the beginning of that conversation, and one that we can share with you at a future date as well. To that point, it's my honor to welcome Harry Monti. So Harry, as some of you know, Symetra, we have formalized a relationship with Symetra this year. And Harry is the EVP of the benefits division, and he's a longtime friend of Reimagine, but we're excited to formalize this relationship in a way that we can kind of bring the InsurTechs doing the work to his wonderful leadership team and have that happy collaboration of creativity, innovation, and insurance happening real time and in real ways to inform the process. So Harry's joined us today, and I'll hand the mic to him for some remarks.
Yeah, thanks, Laura. I appreciate it. And obviously, Symetra is thrilled to sponsor this first event in the Reimagining Retirement series. And whether it's this topic that we're talking about today about funding innovation and where dollars are going, or some of the future conversations that are going to happen around interacting with seniors online or cybersecurity. This is a critical conversation. I think the right time, as a company that focuses on creating financial freedom for people across our entire product suite, whether it be pre-retirement or in retirement. We just think this is an absolutely critical conversation. And so I want to thank the folks at Nassau for coordinating the event and really pressing this topic forward. And as I was thinking about the event today, I jotted down some of the things that have changed from my perspective over the last 9 months, and we know a lot has changed. And this is just a sampling, but if you think about, they're the obvious ones, some of which have already been mentioned, but COVID itself, low interest rates, change in consumer expectations, right? This acceleration of digitization that's going on. Change in risk concerns, right? I don't think anyone's looking at their risk from a health or a financial perspective the same as they were 9 months ago. Things as basic as the impact that isolation has had on the mental health and mental wellness of the consumers that we all serve. Distribution disruption, right? A number of companies have had to reinvent the way that they are interacting with consumers, and also the way that carriers interact with our financial advisor and distribution partners. Lost income in households, how that's impacting buying decisions and buying attitudes and expectations. The medical cost has always been a big disruptor for people as they save, whether it's for retirement or even before retirement, and that has clearly become a bigger issue. Changes in the workforce, right? I saw a stat the other day that 80% of those that have left the workforce are women, right? How is that influencing the way that we view interacting with consumers, and the continued build of this gig workforce? So again, I'm not going to go on and on. Those are a lot of topics that just kind of popped into my head and creates a lot of headwind for the industry, and we have to think differently. But with headwind comes opportunity. So I think this is, again, the right time for this conversation, and I'm looking forward to it. So with that, I want to introduce Doug Roth. Doug is the Managing Director of Connecticut Innovation, and he's going to be our moderator today. So I'll hand it off to Doug.
Thanks, Harry. Appreciate it. And glad to today. Got a couple really interesting panelists, investors, and a host of topics to address with them. So I guess first we'll start off with
For those of you wondering, it's not your connection, it's Doug's.
Yes.
So we're going to give him a chance to
introduction,
come back.
and call me.
Doug, are you back with us?
Yeah, can you hear me?
Yes, we can. Thank you.
Sorry about that. So, yeah, no, I thought we'd start with introductions. Cole, maybe you can tell us a little bit about yourself, your firm, and sort of history and interest in investing in retirement and insurance, insurtech.
Yeah, great. Thanks. Thanks, Doug, and great to see a lot of familiar faces out there. Just a quick 20-second background on Aquiline. We've been around for 15 years investing in financial services businesses. Insurance has definitely been our power alley over that time period. Our founder was Jeff Greenberg, who's the former CEO of Marsh McLennan, and comes from an insurance executive family. I sit in our technology fund, which started in 2017, so focused purely on technology businesses that are impacting insurance. And it's been really interesting over the last 4 years to see kind of the narrative in insurtech change. I was talking in the breakout room prior to this around, in 2017, it was really kind of pushing a rock up a hill to get a P&C carrier to buy software from any of our portfolio companies. That's definitely changed over the last couple of years. A lot more money has flown into P&C, which I'm sure we'll talk about throughout this panel, which caused us to really dig deeper and try and understand, why not quite as much capital has gone in on the life and health side. So I've been spending a lot of my time in and around life and health and retirement and distribution and all that good stuff. So I'll pause there, but that's sort of the background on myself and Aquiline and where we're spending time.
Great, thank you. And Andy, maybe same to you, a little bit about yourself, your firm, and kind of history, interest in investing in insurance and insurtech. Sure,
absolutely. My firm's called IA Capital Group. IA stands for Interatlantic. We've been around a long time. Firm's over 25 years old. In the 90s, we founded a life insurance company called Annuity and Life Re. I was one of the founders, and it went public IPO in 1998. And then we focused on venture capital for the last 20 years. So predominantly for insurance companies, we manage a series of venture capital funds that are focused on insurtech and fintech. So we are technology investors focused on the space. Retirement is one of the most important themes that we see. So not only, we think it's a great opportunity for financial rewards or gains, but also strategically our limited partners are mostly insurance companies, and they're interested in what's happening in insurtech from a strategic standpoint. So we're predominantly focused on North America. We make Series A, B, C, D investments across insurtech. So we do a lot of property casualty insurtech, but we are very focused on retirement as well, and have some great companies in our portfolio, which I'd be happy to talk about.
Great. Yeah, and so maybe Andy, staying with you, so some pitch book data that came across from I think 2014 to 2019, compound annual growth rate of yearly VC insurtech investments was about 60%, and first half 2020 venture activity in the sector was about $1.9 billion invested across 168 deals. So clearly a lot of money, a lot of activity in insurtech, but insurtech is a broad term covering a lot of areas. What about retirement and life insurance? Do you think that those areas are somewhat underrepresented in that investment totals, and if so, why? And how does that change?
It's a great question, and I definitely do. What we see is about 70% of startup activity is in P&C InsurTech, and about 30% is in life and health. And within life and health, some of the health insurance startups have been getting much larger checks and larger funding rounds than life insurance as well. There's also, retirement also covers life insurance, but also covers wealth management tech, which is maybe a little bit outside the InsurTech numbers. But it's definitely underrepresented. I think there are a lot of reasons, but one important reason is there are fewer entrepreneurs focused on retirement, and I think part of that has to do with the personal experiences of entrepreneurs. A lot of entrepreneurs are pretty young in their careers, and they haven't had personal experiences with buying retirement products. So, today I think there are more pet insurance startups than there are life InsurTech companies that are focused on retirement. And it's just because of the person. If you're 28 years old, you might have bought pet insurance, but you really haven't focused on annuities or some traditional retirement products. But that's one reason I think, the selling retirement products, people are skeptical that it can be done digitally, but I think a lot has changed in 2020, and you see older Americans engaging on Zoom regularly this year, and digital prowess has really except for maybe the very oldest cohort of Americans, really just about everybody is digitally native. So I think that I think some of those excuses that people facing retirement age don't engage on the internet is no longer true. And we're hopeful that there's going to be a lot more digital sales, digital engagement of retirement products going forward.
Yeah, great. And Cole, certainly opportunity to comment on that as well, and maybe also is there Andy brought out a great point in younger entrepreneurs, and I think there was someone who once said fall in love with the problem, not the solution. And if you're 25, 35-year-old entrepreneur, how do you fall in love with a problem you've never really experienced, not having saved enough for retirement when that's 30 plus years away. So again, same question to you. And also so the timeline of an investor and the timeline for a life annuity retirement company proving out their business model and all of the metrics of that business model, are those two timelines maybe not in sync? And is that also perhaps maybe an explanation why the sector is somewhat underrepresented?
Right. I'll also touch on, on the investor side, I think it's probably harder for some of the generalist investors out there to really wrap their head around and understand the distribution of a lot of these products, actually, let alone the products themselves. To your point before, not that many young entrepreneurs have bought, an annuity or some of these end of life products. I think it takes a lot more education for generalist investors to really get up to speed to a level where they, can write a check in the space and call themselves an expert. Which is why I think folks like Andy and myself are spending a lot of time there, because we feel like with, events like this and connectivity in the space, we can sort of be one of the few who kind of really understand it. And yeah, I think, that's, I would really just kind of echo what Andy said around the entrepreneur side. I think it's true on the investor side as well. And I, some of the stats that just stand out to us, though, that I think are just, things you can't ignore, just looking at, what's happening with the overall demographic of folks who are entering retirement. I think folks are starting to see some of these numbers around, the 10,000 people who turn 65 every day. That's sort of the silver tech stat that everybody loves. And I think it's gaining some more momentum, but people still need to climb that steeper learning curve on the entrepreneur side as well as the investor side.
Yeah, great. And I'm curious from both of you what you see is some of the key trends that are either going to fundamentally change retirement and the life space, or I think one thing that we've seen with COVID across a lot of different industries, not just insurtech, is that it has forced an acceleration of changes that were already taking place. And I think actually in the near term, that will probably be a more impactful part of these changes. But what are some of those high level trends? I mean, we've seen telemedicine and interest and the shift of to age at home. Lifespans are obviously changing, which might force retirement age issues. Defined benefit pension plans are maybe for the people who are in retirement, that's what they're retiring off of. But certainly for our generation and younger, those kinds of products don't exist. So what are some of the trends that you're seeing that are driving the investment thesis at your firms?
Yeah, that's a great question. Well, there are a lot of important trends in retirement product. We really focus on the technology side, so I'll talk about that. What we've seen is products that have done well through digital channels are more simplified products like term life, or just buying stocks is taken off this year with Robinhood and other platforms, and complex products, whole life or products like that have not really taken off through digital channels. So just to mention two investments that we've made that hopefully illustrate the trends that we care about. One is a company called Next Capital, which has digital tools for customers that are focused on retirement. And some of those customers have financial advisors. Some just invest in their firm's 401k and don't have financial advisors, but either way, they can use the tools to better understand, map out their retirement online. So we're very excited. That's a new investment for us this year, Next Capital. Another investment we have is a company called SmartX, and that's a TAMP and asset management platform. So even if you don't engage digitally, so you call up your investment advisor and do something over the phone, that investment advisor is going to do everything else digitally, so that the investment advisor is going to process a trade or make do anything they do through digital platforms. So SmartX is a next generation digital platform that really enables financial advisors to better serve their clients. And I think some of the processes have been outdated. So, financial advisor might recommend an S&P 500 index fund, but the client might say, well, I don't want to invest in energy stocks. I don't want to invest in Amazon in my portfolio. So it's a problem. The financial advisor is not going to process 490 individual trades because the client doesn't want 10 stocks in their portfolio. Well, these next generation platforms can do partial shares. They can split things off, and we think that's a lot of the future. On the younger generation is going to be more particular about what they invest in, and the tools need to catch up. So those are just two of the trends that we've invested in this year.
Yeah, I think on our end, it's sort of two buckets. We believe there's a lot of low-hanging fruit within life and health broadly, where we've seen some success in other areas of insurtech and fintech, such as software for the middle and back office to help streamline processes, data analytics for underwriting. I guess specific to life and health, a few areas we're spending time. You talked a little bit about sort of the low rate environment and creating yield through sort of new product innovation. I've spent a lot of time looking at the structured note market overseas, and how distribution works over there. And are there ways to sort of tie that into annuities in the US? Another theme we're spending time with is longevity risk and how that relates to sort of aging in place. If you look at a lot of products such as long-term care insurance, which boomed 20, 30 years ago, there's sort of a tsunami of claims that will need to be paid out over the next couple of years. So how can you use technology to help keep your policyholder at home as opposed to paying very high claims to nursing homes? We've seen a few interesting companies that are trying to tackle that space as well. So we sort of segmented into those kind of two buckets. What are kind of the more mega themes such as data analytics and middle back office that could sort of make an impact in life and health, and then some of the specific life and health trends that we're spending time in.
Got it. And kind of a riff off a question from the chat. Are there, when you think of kind of the value chain of in retirement, and we'll throw life insurance in there as well, in terms of sales and distribution, underwriting, claims, and various other back office, are there different steps along that value chain that are more interesting to you from an investor perspective, or that you think will be fundamentally disrupted by insurtech and sort of up and coming technologies and startups?
Yeah, we care most about digital sales and digital engagement. So sales distribution is maybe the single largest area, and you've seen there have been some successes in this. For example, this Assurance IQ was bought by Prudential for over $2 billion, and they distribute supplemental Medicare, life insurance products, products that are really focused on Americans that are median age or older, and it's been very successful, and we think there's going to be a lot more activity there, and same thing with digital engagement, which I talked about with Next Capital. In other areas of insurtech, we're very interested in product innovation, and I think that's very important to the sector as a whole, but it's hard to have proprietary products in retirement. For example, target date funds have been an innovation over the last 10 years or so, but there really haven't been successful tech companies around target date funds. They've just been copied by the major product manufacturers, and there's not a lot of money to be made for a tech company on that. So I think product innovation and simplifying products and not having products that are too expensive are important trends for the industry. But from my vantage point as a tech investor, we look at digital sales, digital engagement.
Yeah, I guess just starting on digital sales and engagement for us, I think a lot of the products within life and health are still sold versus bought. So, how do you really make the agent more efficient? I think there's definitely a lot of opportunity there. In terms of, I spent a lot of time thinking about distribution, embedded fintech, and now embedded insurance seems to be sort of a buzzword or a theme, whatever you want to call it. But if you think about where a lot of folks in the U.S. traditionally buy life products through independent agents, are there ways to do more of that through your independent wealth advisor, the wirehouse that you sort of buy or take broker advice from? Shouldn't that all be sort of consolidated in one kind of financial platform for you through one advisor? Still sold versus bought, but can you do it in sort of a channel that brings things together? And what are some of the opportunities there around the plumbing, the middle back office, that make that seamless and easy for a traditional financial advisor or someone who's not necessarily as well versed in insurance?
And I'm curious, both of you have mentioned quite a number of times technology, and so I'm curious if there is any technologies out there that you think are going to be, I hate to overuse the word disruptive, but really impactful in the future of retirement. Things like AI and blockchain, Internet of Things, 5G, are there any technologies up and coming that you really believe will be adopted and fundamentally change either the business models, the products, or the distribution within this space?
Yeah, I can start there. I think that's what will ultimately power a lot of what we're excited about, and sort of these micro trends. Like, for example, I talked about aging in place to help save long-term care costs or to help lower long-term care costs for an insurance carrier. I don't think any of that is possible unless you have some sort of data science model that understands your most at-risk policyholders in a cohort. It's really hard to just go out and say, okay, we have 10,000 policyholders. We're going to engage with all of them and, send caretakers in the home for all of them. That's much more difficult. That's been tried. But if you can use something like AI to triangulate, hey, here's where we're going to get the most savings, then I think it makes it much more realistic. And, that's where we'll see sort of AI and some of these more kind of high level technology trends actually come into play within life and health.
Yeah, I think all those technology trends matter, but I think where we are today is enough to, there's enough technology out there to really have a successful distribution engagement of retirement products online. I think products can be simplified, standardized, lower fees. They'll be sold more, and technology can help on all of those factors, especially transparency on having simplified tools to let people understand exactly what they're buying, and so technology is going to help on all the above, but it's not like the industry needs to wait for a silver bullet. All the tools are in place today.
And I mean, do you see any resistance in the industry, right? So that there's a lot of existing business models that help with distribution, whether it's financial planners or brokers and agents, and they may or may not be as accepting of new business models, new innovations, the use of new technologies, obviously fearful of like the direct to consumer approaches that digital transformation might enable. Are there other areas of resistance within the industry that are maybe prolonging the adoption of some of these new technologies and new business models and new products?
Yeah, I mentioned before, we think a lot about the opportunity in kind of the middle and back office. When Verisk bought Fast, we spent a lot of time thinking about that acquisition and thought it was really interesting for a predominantly P&C player to branch out and buy a policy admin system in life. I think when you think about resistance, though, the reason you've seen a lot of people struggle with kind of getting those first couple carriers over the finish line within life and health is a lot of those policies are currently outstanding. They're on some on-prem system. In a lot of cases, a lot of the data is still stuck in paper format or, areas where it's really hard to sort of migrate that over onto a next gen kind of cloud solution. So when I think about middle and back office opportunities, there almost has to be sort of a Trojan horse to make your way into a carrier. I don't think anyone overnight is going to say, you are now going to be our next policy admin system. It sort of has to come through, whether you get data integrations through wholesalers or you start out as more of a sales tool for captive agents for carriers and work your way further down the stack. I think that's sort of where we're going to see a lot of the traction come within the software that exists within the four walls of carriers, which we think a lot about.
Yeah. The only thing I'd add is that, life insurers are very slow moving creatures. And, historically there's been more innovation from, Fidelity, Schwab's of the world on the technology side than the life insurers, but that's starting to change. And it's one of the reasons that my firm's so bullish on investing in InsurTech, because there's tremendous opportunity in the future, because life insurers and insurers in general have underinvested in the sector in the past. So you can see life insurers are embracing technology on term life, but for most life insurers, term life isn't the big money maker. It's the investment products. So that's going to, they're going to change slowly, but everything's moving in the right direction.
Got it. And maybe final question before opening it up to kind of audience questions. Back somewhat related to sort of trends. I mean, obviously we've just gone through presidential election. We're nearing the end of the year. It's kind of a great point in time for assessing those super high level kind of macro trends and how they might impact the sector as well. So, I think Paul, in kicking all of this off, mentioned, historically low interest rates, but, we've got, big and growing deficits, not just here in the US, but, globally, we've got various trade imbalances, regardless of people's feelings on the outcome of the election, increase in versus decrease of government participation in some of these different sectors, any kind of high level trends that you're keeping an eye on, because obviously, pick on you, Andy, you mentioned sort of the alphabet soup of your investing, A, B, Series C, D, and so forth. Certainly in an area, Series A, you're looking at a pretty long time horizon before you might see an exit liquidity event from that investment. So you need to be looking at 3, 5, 7-year timeframes. So what are sort of the very high level kind of macro issues that you're sort of processing as you make some of these investments, on the earlier side?
Yeah, it's a great question. I mean, we try to make investments that will perform well in a variety of macroeconomic environments, but factors like low interest rates look like they're going to stay for a while. So it's hard to invest in a tech company that's focused on fixed annuities, for example, just because returns are going to look low for the foreseeable future. The policy issues and the divided government in the United States is a big problem for people planning retirement. There's a lot of uncertainty over tax policy. Is there going to be Medicare for all? All these policies get confusing for people, and so those are the types of issues, the macroeconomic issues that people want to discuss with a financial advisor. So I think that the uncertainty in the macro area is delaying the digital engagement. People want to have conversations about, what's going to happen in the Biden administration about tax policy, for example. People have real questions that are hard to answer through digital channels on that. So I think the uncertainty out there in the macroeconomic area is delaying people just buying whole life on the internet or something like that, because there's just too many questions out there. But otherwise, a lot of these trends are huge issues for people, and it's something that the industry really needs to tackle, from low interest rates to longevity risk.
I don't have too much to add on that. I think we try not to invest in businesses that have too much stroke of the pen risk. So we tend to think, like Andy mentioned, are these conversations that folks will want to have with their advisor? Okay, great. How can we make the advisor more efficient and empower the advisor in that sense, until there's sort of a very clear path forward, where there's sort of less of a risk from that sort of high level.
Right. So maybe I'll kick it back to Paul and Laura. I don't know if there's any additional questions in the chat, or if you wanted to kind of open it up to any audience questions.
I would say, listen, keep the questions going. We've got some great questions. We've got some great people, by the way. Thanks for giving us your time, and I want to make sure we kind of get the discussion rolling here. A couple of things I heard: inexperience of youth. Oh yeah, it's and there are a couple of solutions. One is, which we've done, and actually, Nirja with Spyglass actually came in looking to serve the P&C market. I think Tom Buckingham and our whole team kind of said, "Hey, look over here in this other part of the business. We'll find some opportunities for you." So I think there are opportunities there. Also, rhetorical, question out there: is there going to be an opportunity now for people to start tackling micro pensions finally? Periodic pensions that started at an earlier age. I know there are some startups in that area. What is the product? Andy, you mentioned it. I think I think we tend to, as industry people, think about signed PDFs, as the product, and maybe it's a subscription service. I'm seeing a lot of interesting startups there. Is it technology that helps people, convert assets into income, which primarily was done by insurance carriers? Maybe it's not done by insurance carriers, going forward. And then finally, Doug, I think you teed up a good question about the administration. While we've had all of this mess going on with elections, COVID, quietly the Republicans and Democrats both passed the Secure Act. And Ramsey Smith and I have been talking about this with a bunch of people in the industry. We've got some legislation that kind of went unnoticed that opens up a lot of avenues for bringing retirement planning to workplace. So I think there's some interesting change, if we look a little bit beneath the covers, some opportunities here. With that, let me just sort of pass over. So we got a couple people, teed up, real experts in the area to give us, business perspective. And I think, Doug, you mentioned, I think it's more interesting to focus on we need to focus a little more on the problem than necessarily the solution. And, first up is Kathy Fuertes who's an expert in the 401k space. Kathy spent many years with Vanguard, now with Infosys launching a retirement service center in Philadelphia, correct? Just like to ask you, your perspective, maybe tell people a little bit more about what you've done that I didn't fill in, and then what are the problems you think that could and should be tackled in the next couple of years?
Yeah, absolutely, Paul. So thank you. I'm Kathy Fuertes. I spent 20 plus years at Vanguard, focused on the 401k side of retirement. And most recently, I've moved over to Infosys, where we're building a retirement center of excellence here in the Philadelphia area, which is really focusing on innovation and using technology to tackle some of the toughest challenges in the retirement space. And I absolutely agree. Multiple people have said here that the biggest thing you want to do is focus on the problem, because most of the technology is out there. It's applying that technology to the business problems. And as I've been listening to the discussion thus far, I was kind of tying together, my experience in 401k or retirement plan, and what I'm hearing through the panelists, and I think that the challenges, the needs, let's say the business problems we're trying to drive, are very much the same. And I think about it from a customer lens, a distributor or a financial advisor lens, and then that service center, middle back office provider. From the customer lens, it's all about simplifying the complex. And it's even more important now as we talk about, we're having all generations on digital channels now. So we need to figure out, how do we simplify that complex, the complexities in the digital channels, and how do we make it more relatable to what these multiple generations are doing on the web today, or what they're doing in everyday life. One thing that I think about there, as I think about the retirement, the 401k space, there's a concept of auto enrollment and auto escalate. So it's a bit of you'll find these people who, and I know there's going to be a behavioral finance session, I think, coming up. I'm looking forward to hear more on that one. But there's inertia. You're facing inertia. So in the 401k space, there's the ability for an employer to auto-enroll and auto-escalate savings into retirement. What is that, I would challenge, what is that same, how do you tackle that same concept in the insurance space? What is the auto-enroll, right, of the insurance world? That would be a really interesting problem to go tackle. And then that takes you into that customer side. They don't need to interact as much because you're taking care of it for them. For the distributors of financial advisors, I think a big piece of it is how are you engaging the customer for cross-selling, for upselling. In the 401k space, you have those natural interactions with the customers on a regular basis because they're making, payroll by payroll contributions. They're taking loans, they're taking withdrawals. You don't have that in this space. So how do we need to be more creative in forcing that engagement by connecting retirement to things people do in their everyday life, like health or wellness or other adjacents that, that people are doing. And I think this is a place we talked about, I'll say the younger generation of entrepreneurs can't really relate to retirement. Well, they can relate to what they do every day. So it'd be really interesting to challenge, this group to say, what is it that you do every day, and how can you relate that to retirement? Kind of flip it around, right? And then, I also think that there's this opportunity for hyper relevance. Like, how do you use technology to help financial advisors or distributors, really have that personalized, hyper relevant time to do that reach out to a customer and reinforce the brand, do the cross sell, upsell, et cetera. So there's a lot of opportunity in there as you think about AI and ML and just kind of the technologies that focus on really deep analytics and personalization. And then the final piece that I'll talk about is the service center, middle office, back office. I think we talked a lot about that already, but in there it's all about operational efficiency. You want to lower the cost to serve. So any type of lights out processing on the back end, in the middle office and the back office is incredibly, incredibly important. Increase the, lean out the process itself and leverage technology for straight-through processing. So there's a no-touch focus in the middle and back office world. Allow self-provisioning in the front office and really focus on those high value, high touch, or high value touches, I should say, opportunities that are out there. So that would be my perspective on areas to focus in on.
Well, thanks so much, Kathy. And next up, Rich LaVoice, Executive Vice President of Retirement Distribution. A lot of us, you're well known in the business on the annuity side. Tell us what, if you had $10 million, what would be the problems you would put the money at?
Oh, great question. I mean, first of all, I think this is a very complicated area, and to get annuities sold digitally is going to be a number of factors really need to change. And I think that you have UX issues. And I think back, I used to be selling annuities in New England as an individual rep, 40 years ago. And it really hasn't changed significantly. We give them a brochure, we can give them an illustration, and we give them an application. And it really hasn't changed that much. So there's an opportunity there just in the UX, like how do we change the buying experience? I know that, you, Paul, have probably the first app, mobile app in the industry to buy an annuity, right? And that's brand new. And this is 2020, right? So it's like, geez, why wasn't this done 7 years ago or something like that? So we have that issue to think through. Product issues, we need to think through that as well. We built the products for an analog age where you needed large premiums to make it so you could make a profit because of the cost of issuing and administering the policies. And now with digital processes, this is going to change. You'll be able to bring down the amount that somebody has to start with to de minimis numbers because it's all going to be digital at the end of the day, and that could be a big game changer right there. We even have some marketing issues we need to think through, and there's some innovation that's going on, even like with Mass Mutual taking the deferred income annuity And they didn't really change the product, they're changing how they're marketing it. So there's some opportunities on the marketing side, and there's huge needs in the education area. And how do you educate the public as to the value of these products? And that is a huge issue that we need to overcome. In the breakout session we were in, Ramsey and Mike Kalen and others, we were talking about this issue. And I do think that planning is a big issue and need. And if we can get the planning part right, it will lend itself to making people realize the value in an annuity product. So imagine you're a 65-year-old man, and you want to try to get some income out of your out of an asset. Let's say something, a CD came due. What do you do with your money? If you put it into like the AGG, the ETF, or the broad bond market, the yield on that right now is 2.3%. So if you had 200 grand, you're going to get $4,600 worth of income. An immediate annuity, a lifetime immediate annuity for that same person is probably more than double what you could get in that ETF. So right there, it's like you have to realize that this is going to be something that is got to be a component for many people's financial plans. And COVID is accelerating all of that, because the numbers of people that are already out of the workforce, significant numbers, like 100, maybe it's 50 to 100% greater than what happened in 08, 09 in terms of older people who lost their jobs. They're just giving up. And so there are deep implications for society if we can't figure this problem out, because if all these workers are now unemployed and they're never going to get back into the workforce, they're basically being kind of condemned to a quality of life that is going to be very suboptimal. And if we don't help these people with taking a subset of their money and finding a way to create a lifetime income for themselves, they're going to run into a situation where they're going to run out of money. And that is going to be problematic for society, for the US government, et cetera, because what are we going to do with these people? What's the safety net? So as an industry, I think that if we can figure out some of these areas, I think that'll be important. I think regulation is another area that we could use a little bit of tweaks on. And hats off to you, Paul, because like with your iOS app, you boiled it down to like 10 suitability questions. That has got to be a record for the annuity industry to have been able to do that. And this is another area where it's like, how do we, get the regulation on this to be appropriate? And that I think is again another problem. But if we can look at a number of these issues, I think that we can make a big difference and a positive difference for Americans in retirement.
Hey, thanks, Rich, and thanks for the kind praise. It is interesting, just to kind of echo some comments Andy made too. Is 5 or 10 years ago, building an app was a big deal. Today it's not so big, but the challenge is you well know, how do you engage people, right? We've got interesting products. Nobody knows who the products are. They don't Google them. And Vinod, who's CEO of SE2, he actually dropped a really good question in here. And maybe Andy, I'll throw this one to you. And his question was, we've seen he had to drop off. We have seen traditional distributions sales to slow down on annuities, but firm like Fidelity sales go up considerably on fixed annuities. And what is this, right? Are consumers going to demand the simpler products, or are certain companies, and I'll add a little different wrinkle, is it just that certain companies have business models that are better suited for reaching people in this world? And demand hasn't changed at all. It's just, we haven't been able, traditional industry has not been able to reach them when they can't show up in somebody's house.
I think it's all of that. I think it's trusting the provider. It's low fees. It's just people being comfortable that they're getting a good deal and they understand the product. Paul, I think 5-10 years ago, people would say, oh, nobody's going to make $100,000 investment on the internet or something. I think those days have changed. People do it routinely in buying stocks, and there's no reason they can't do it with annuities or other retirement products. But I think that, people trust Fidelity, and they're putting their, retirements there and investing it either through a financial advisor or directly. And that seems like a more logical place to buy annuities from a lot of people's standpoints, even if Fidelity is not the issuer, right? It's just a platform. But it's just trust and transparency, like I said before.
Yeah. Hey, Susan Winkler, can I put you on the spot? You have a really good question about, of course, innovation by region and state. Do you want to just ask your question, Cole? Maybe this is a good one for you.
Okay, thank you for putting me on the spot, Paul. But I was thinking as we're talking, I was putting a larger lens on this, and as we're looking to, and my focus is always growing the Connecticut economy. So where are we in the terms of the U.S. and the world as investing in insurtech? Are we behind the curve here in the U.S., Connecticut region? And if we are, why? And who's leading the charge in adopting insurtech, fintech investing into, I said LAR, but it could be P&C, just insurtech, fintech. So I'm curious. Global perspective, please.
Yeah, I think within insurtech as a whole, I don't have the numbers in front of me, but U.S. typically tends to lead that from a funding volume standpoint. As Andy mentioned in the beginning, life and health only makes up about 30% of that. So lagging the rest of the world, I don't want to say we're behind specifically in any other region, but I think if you think about the general capital that's committed to fintech, a huge number, and then even within insurtech, life and health, is behind where I would expect. That being said, I think it sort of remained at that 30% level of an overall kind of growing pie. So it is overall generally growing. I think, it's sort of, to put it very simply, we've seen innovation with banks. We've now seen innovation over the last 3 or 4 years within P&C. And I just think life and health are sort of the last folks to move, across that entire fintech investment cycle. So I think it's inevitable that it is coming. That's what we believe. It's just sort of a laggard of that group of three is how we see it.
And would you say that U.S. is leading the charge in that, Cole? Do you feel like we're behind in investment in those types of technologies and adopting those? Just curious on perspectives. I'd love everybody's perspective. We always have room to grow. So, right. But are we leading? Are we, right in the middle as far as our focus, investment in the?
Yeah, I mean, we invest in North America, Western Europe, UK. We have an investment in India as well as in Israel. I can say with confidence that on the P&C side of the house, that the U.S. definitely seems to be leading. I mean, we've seen some amazing insurtech businesses that are full stack sort of go public this year, which has been great to sort of watch how another type of investor sort of looks at those opportunities and the excitement level around it. Within life and health, I think it's a little bit harder to kind of plant the flag that the U.S. is sort of out ahead of the charge completely, but all our relationships, both in the U.S. and abroad, they seem to point us to a lot of deal flow that comes from, the East Coast and within North America generally. So I'm not sure if other folks want to chime in on that, but, can say with more conviction around insurtech generally, yes. Within the subsector of life and health, it's a little bit harder to triage that.
Yeah. Well, thanks. And Don Lennox, I think we still have you here from Symetra. Don asked a really interesting question about what are the boundaries of retirement. Don, are you able to elaborate your question? And I'll actually ask. I think it's a good question for Cole, Andy, and Dave Miles. Dave Miles, if you can jump on, you're also another investor. I'd love to get your perspective on this question as well here. Don, why don't you tell people what you do and your question here?
You want me to explain myself, Paul? Okay. What I was riffing on, I at Symetra, I deal with innovation, technology scouting, kind of looking at the forefront of things and how they can impact the industry. So the question flows naturally for me from what problems do you fall in love with versus the technology, right? So what I'm hearing a lot is the problems we fall in love with tend to be the ones we know immediately and are close to us. And yet I think there is this very interesting domain of what we don't know, what sits outside of our boundaries. And those boundaries are blurring. So when you step back and look at the trends, the impacts of, let's take the current vaccine, COVID-19 vaccine. That is a genetic engineering application that is going to affect our lives very quickly and will change lifespan and quality of life issues. When these things start happening faster and faster and faster, how do we start to think about risk differently and find different ways to mitigate it? I think that's the nut of this.
Andy, maybe you tackle it first.
I'm sorry, Paul, what's the question?
Well, it's just like, at what point, we know the problems we know, we just don't know the problems we don't know sometimes. So when we get like, you think a little bit outside of our industry, now on the life insurance side, Fitbits with, related to, I could actually do underwriting. You just start to go older in age. We've got some interesting genetic testing products out there to talk about, Paul Tyler's chronological age is, oh my gosh, but what's his biological age? I'm really young. Yeah. Just, how do you sort of draw the bounds around investments and problems that link into retirement? I mean, are you very narrowly focused on sort of definition of technology driving what? Is it living longer? How do you see your investment mandate?
Yeah, and you can't lie about your age to me since we went to college together.
That's right.
I think there are a lot of fascinating issues for the industry, and we are more narrowly focused on technology. So if something can't be proprietary, if a startup's going to come up with a great idea but it can be copied by a million other companies, then we're not so focused on it. So putting aside what we think is a proprietary idea that a startup can do very well, and I just think there are longevity is just a huge issue for people. I think the government safety net is a very big issue, and people are counting on Social Security and Medicare, but there's uncertainty in those programs. They're not as generous as people might expect. Living off Social Security check is very hard, and a lot of it is just building into the work, the work savings or just daily lives of so it's not really a theme to invest around necessarily, but just building into retirement, into your day-to-day life, your work life, payroll deductions. It's just something that people have to focus on, every day in their whole lives. It's not like there's going to be a Fitbit and it's going to solve the retirement problem.
Yeah, Cole, longevity. I want to pitch a longevity startup to you. Is that you? Is that somebody else?
Yeah, I guess also, Don, to answer your question, we do spend time in sort of a theme or bucket that we call emerging risks. So hate to use a PNC example, but if people have underwritten cat insurance the same way for 80 years, things are changing in our environment, the way we look at those risks and underwrite them, maybe we should use alternative data in the existing model we have. Maybe we should think about new models. So I think the same is sort of applicable to emerging risks within life and health. I don't know that we have a clear enough view around what the vaccine will do to people, but I definitely think, Paul, as you mentioned around longevity risk, that's something that there's that's sort of more of a clear trend, and I think we would be willing to invest or at least take a really hard look at how we can use alternative data, not just some of the wearable stuff, but there are other ways to look at large population data sets in mass, derive some type of data that we otherwise aren't using today, and use that in underwriting. So we do look at sort of emerging risks as a theme, and then typically the opportunities that I see in that world have to do a lot around alternative data or some sort of underwriting mechanism.
Hey, thanks. Dave, Miles, do you want to just to give people a quick intro and get your perspective on
We're happy to. So our firm is called Manchester Story. We are an early stage insurtech focused. We also do fintech and healthcare, but primarily insurtech focused fund, invest across the United States and a bit outside. I think my answer to the question would, if I hear the question right, it's, how do we get beyond those problems that we know? And some of that is inherent in the process that I think most in the venture capital business are involved in, which is hearing companies make their presentations on new and different approaches that they are taking to problems that we do know and sometimes problems that we don't. But another way that we go about it is we do spend time developing and trying to tease out themes for investment. And I think this came up from Cole and from Andy as well. And one I'll just use it as an example in longevity is we spent a lot of time trying to think about that period from just pre-retirement to then following retirement through end of life, and what is the mix of help that the consumer wants and needs, and those can be very different. And I would tell you, I think at this point we're thinking that it doesn't sort itself into neat, do it for me or do it yourself types of models. That there's a real desire to feel more confident and more in control, whether that's in terms of investments or whether it's in terms of healthcare decisions, independent living decisions, all of those kinds of things. And that's it would be easier if you could just bucket it in one or the other. And we think part of the really interesting intellectual puzzle is what might be a new mix of I can do these things for myself, but I also need to be able to rely on outside resources for these things so that I can feel more confident and feel more in control, even if I'm not doing it all myself.
Interesting. Thanks. Well, I'll put another former schoolmate of mine and partner in retirement crime here, Ramsey Smith. Tell us. I'd say give people just a little back of your background. And my question for you is, if you give you a portfolio to manage, where you've got some experience with that, where would you put it?
So thank you. So my background, I worked at Goldman Sachs for more than 2 decades. And one of the businesses I built there was helping life insurance companies hedge all the risks they were taking on from their variable annuity books and their fixed index annuity books. And one of the things that I discovered in the process is we started moving away from hedging, and towards helping a lot of these companies develop new and different products. We suddenly were out in the distribution channel and sort of had the observation that there was a real opportunity to focus on really a lot of the themes that are coming up again and again and again today, which is greater simplicity, greater transparency, and really doing as much as possible to focus on improving financial literacy and empowering the consumer to make their own decisions. And so that has been the main focus of my business, which is called Alex.FYI. It was influenced. The name was inspired by Alexander Hamilton. Now, if I had a budget, the thing that I would focus on, or a bigger budget than I have, I should say. I do have a budget, but a bigger budget. Really focusing on a few key things. One is solving problems as much as possible throughout the value chain, right? Either by building or ideally by integrating existing technologies. So Andy Lerner, said earlier that all the technologies we need do exist. Pardon me. And I tend to agree with that. What ends up happening is any particular startup or company that you'll run into will solve sort of one problem in the value chain, and inevitably, all the efficiencies that are gained there can get lost very quickly as you move on to the next step of the process. And so the real thing to focus on is, in my mind, is identifying sort of best of breed processes or technologies in each part of the value chain and finding ways to integrate them. And in my view, the way you do that is you either form partnerships, which is what I'm trying to do with various folks, or in an ideal world, you take more of an M&A approach to it, where you either merge or you have sort of economic partnerships, or you have common investors. And I think that's where we're going to see the greatest progress on a going forward basis. And it's everything from customer acquisition to the application process. So doing some of the things like Paul is doing, like simplifying the process. Like, here's the thing that blew my mind was that e-apps are kind of the state of the art still, but e-applications are only sort of modestly better than paper applications, in my view. There's a lot of development that needs to happen there. So anyway, I'll stop there. But I think it really is fixing as much as possible the whole value chain so you have a straight through process. And when you see the insurance companies, so you take Lemonade as an example, they've solved the whole process. They've solved the entire stack. And that's part of the reason why they're able to offer a product in such an efficient way.
Yeah. Hey, thanks, Ramsey. Now, and we're almost to the end here at 12:30, but we also want to, over the course of these 5 series, is kind of introduce people to interesting startups, and kind of in the spirit of the last conversation we had, which is what are the boundaries of retirement and how do you engage people? I can tell you from personal experience, we got a great app, but getting somebody to talk about an annuity is very hard. How do you build trust? How do you get people to know, like, trust in a digital age? That's actually one of our other forum topics. My hypothesis, you've got to start with some bigger problems first to get the trust and start a conversation. And so with that, I'd like to just flip the time over to somebody I know probably everybody knows, Farron Blanc. Farron, thanks so much for joining us. Farron just did a phenomenal job for a reinsurance company, pioneering a lot of investment, a lot of startups in the area, now doing a startup of your own. And Farron, welcome. And do you want to just give people a quick intro and jump in and talk about what you're doing to engage people in retirement?
Yeah, no, thanks, Paul. Great to meet everyone. It was a great conversation, about all the stuff that we're chatting about. So briefly, I have a few slides that I could walk through very, very quickly. As a visual person, I find it's always easier to, to share and look at something, particularly when we're all rather than staring at my head exclusively. But yeah, so what we're building at Gerry is a virtual concierge for the future of senior living and long-term care, senior care. Obviously, retirement, the way I think about it is retirement is both health and wealth. And so just as a background, as Paul mentioned, was previously involved with Reinsurance Group of America, helped start RGAX, grew that to 400 people, and was also the president of a life insurance company and did a whole bunch of other things. My co-founder was this co-founder at Tala, a micro-lending startup that has raised like $300 million, focused on giving microloans to people based off of the data on their address books and their phones. And then after that, spent some time at AARP, and we're super blessed to be backed by some great investors like Silicon Valley Bank, Bessemer, AVC. But personally, my experience with this is my father. So my father ended up passing away in April from COVID, but before that, he spent the last 4 years of his life in a nursing home. And that's super stressful, super confusing. It was very expensive, $10,000 a month, almost brought my mother to financial ruin. She ended up selling her house privately to our neighbor's cousins without an appraisal, just because she wanted the transaction done. And so that just exposed me personally to the opaque predatory world around, not just the retirement go on cruise, but the real downside, or the tail risk that retirement can bring about. And unfortunately, we're not alone. There's 35 million people that are going through this. And so what we're building at Gerry is we're using licensed experts, social workers, and LPNs to help seniors and families in 4 buckets. And then to Paul's point, the way we really think about it is, I think you need to handle all 4 of these tasks, or at least the 3 tasks to earn the right and the trust to be able to have the conversation around financial well-being. So briefly, what we do is we help with daily essentials. So we've arranged discounts and negotiate pricing for groceries, food delivery, transportation, prescription drugs, at a zip level for our clients. We also do tech support and remote support. So we're not the people to call if your Wi-Fi has gone out, but we do help a lot of our clients reset Amazon passwords. One of our clients setting up an Etsy store online, is joining Zoom calls for their churches or house of worship. So that's also, something we do. Health and nutrition, obviously, so at-home exercise plans, nutrition, and we keep tabs over a longitudinal period on like sleep, emotional cognition. A lot of our clients are depressed, and some of them talk about suicide and heavy stuff like that. And so we're there, to chat through that. And then the final topic, and this has come up, is a lot of our clients are asking about what's the right insurance coverage that I need. How should I think about estate planning? They don't use the words estate plannings, but they are thinking through, how to pass on or make sure that their wishes, whether it's powers of attorney, healthcare advance directives, trusts and estates, are taken care of. And so that's what we do. That's the way we help. Those are the 4 buckets. And then we do that through using very lightweight technology and personal support. So we're not asking them to download an app because it's very challenging. The average age of our client is 72 on the independent senior side. So we're just meeting them where they are, and building very lightweight, solutions, video, content. So this is a screen grab of our grocery delivery app, and so how to just simplify the solution so that they can find 3 locations in each of their store, in each of their zip codes. And then same thing on senior living communities and at-home care. And so just to end, the way we think about it is, how can you provide peace of mind for the family? And then on the back end, use data science to make a repeatable process. So we're able to evaluate and rank 40,000 communities, 15,000 home care agencies, 800 adult daycare. I think we have a database of, I think it's 8,000 grocery stores and 4,000 pharmacies, all at a zip level, and continuing to build that over time to be able to help seniors and personalize their care and coordination, both on the health as well as the wealth side. And then most importantly, avoid predators. So trying to bend the cost curve on service delivery, and then also, saving them time, money, or stress. And so, yeah, that's what we're doing. Obviously, it's not, I think Paul said earlier, our clients aren't asking or Google searching, what fixed index annuity should I buy? But they're more just like, hey, I have this need or this worry, who can help me navigate that? And that's how we're thinking about it and trying to plug into retirement.
That's great. Thank you so much, Farron. And looking at the clock today, with 12:29 at the top of the hour, being respectful of everyone's time, I want to say thank you for joining the conversation today. Your participation will help the industry reimagine retirement in the current and future states. Special shout out to Harry, Doug, Andy, Cole, Kathy, Rich, Ramsey, and Farron. Your insights and experience are very helpful in this conversation, and I hope that it got everybody thinking about how we can change our viewpoint to then change how we're going to do business differently coming up. Special thanks to Symetra as today's sponsor, and I hope everyone had the opportunity to enjoy coming together, sharing ideas, sharing knowledge, in many cases, decades of industry knowledge that will help form new thought processes with a combination of tech and peace of mind. So with that, we invite you to join us on December 2nd. And for any and all of the upcoming forums, you'll be hearing from us afterwards. We're going to be converting today's conversation into a podcast to be shared out through Reimagining and also That Annuity Show. We're also going to be creating a discussion paper. So you will see all the content from today come out in 2 different forms. We'll make sure to tag all of those involved so you can share it out with those in your network.
We want to especially thank today's sponsors, Launch and Symetra.
Thanks for listening. If you enjoyed the show, please rate and recommend us on iTunes, Stitcher, Overcast, or wherever you get your podcasts. You can also get more great information about this company and other great startups at imagine.nsre.com.